To get across what is moving markets, I caught up with Pete McGuire from XM.
US equities, I thought, ended fairly strongly considering, the week that was and the month that was. And you got that S&P up, the best part of nearly 0.6%. So that was strongly bid up. Even analysts are saying it's sitting, the chance of hitting 5,000 by New Year's Eve. So everyone's, piling in. They all seem to be long. So let's just see how it rolls.
All right. What do you make of gold then, Pete, taking out a new record?
Yeah, you betcha, Andrew. 2090. It's just, a couple of cents under. What do you say? I mean, it's strongly bid up. It's been incredible bull market, and let's see how much further it's got over the next, couple of weeks leading into Christmas. Seems to be all just one-way traffic at the moment.
Yeah, the gold bulls are very happy going into Christmas. Pete, let's start though in the States. What we're seeing there, as I mentioned there, global equity markets led by Wall Street higher on Friday. In fact, the S&P reaching its high for the year, off the back of more commentary from Fed Chair Jerome Powell, which markets perceive to be more on the dovish side, an indication to the markets perhaps that the Fed is done with its hiking.
Well, exactly, Andrew. That seems to be the theme coming out. Even Governor Waller was saying that. So you could see start to trim them back by, May. They're saying now up to, I thought it was about 115 basis points up from 90, but I just saw something on the screen and it says it could be as high as 125 basis points over the time period of 24. So let's see how it rolls. And it should be one very, very interesting year where the ingredients seem to be all pointing to, continued growth. We'll just have to see whether that can be materialised.
Yeah, taking a little more of that data, and of course the market's now pricing in a rate cut from the Fed in the first half of next year. We also got some more manufacturing data out showing that remains weak or in contractionary territory. How are you assessing that data we're seeing out of the States at the moment?
Yeah, exactly. I mean, that ISM data, and we've got that rolling this week. We'll see that drop. So we've just got to see again, whether it can be, I suppose, some point of inflection, and you start to see it tick back up. We've just got to wait and see how that moves and what impact that has naturally to Fed policy and what's interpreted from the market. I feel as though, it's a big week for data. We got the November PMI numbers coming out, and October ADP report for November as well. So it all rolls into a very interesting week leading into Friday, of course, with non-farm payrolls.
Yeah. All right. Okay. Now, lots of data, of course, locally. The big event being tomorrow with the Reserve Bank board meeting. Where are you seeing inflation tracking at the moment, particularly as far as wage growth is concerned?
Yeah, well, that's the issue, Andrew. I mean, when you're thinking about that as far as a number, I'm not expecting a rate rise tomorrow, and I don't think many traders or analysts are. They're saying there could be another one by March of 25 basis points, but certainly not tomorrow. So we've just got to see how that rolls. As far as that inflation number, yeah, it ticked down, to 5.3 year on year. But the great challenge is, what is it going to do? We get the true numbers really coming out on 31st of January, which will look at a more comprehensive number, considering that'll be quarter on quarter. So I've just got to wait and see again, over this summer period, how it all transpires and what impact it has naturally to our equities and, of course, to the Aussie dollar.
Yeah, and as I mentioned there, Pete, markets in the States pricing in a rate cut as soon as March, but looking like the prospect of any rate cuts here considerably down the track.
Yeah, very much so, Andrew. I mean, they're also saying it's a 40% chance of another 25 basis points by March. So it's a differing view and or differing landscape. So this is where we're running at the moment. We've just got to see again, the impact it has, and it's a long way away, March. It doesn't sound far, but there's a lot of water to pass under the bridge between now and then, and that inflation numbers need to continually tick down. And wage growth doesn't need to tick up, and if it goes the other way, then that's going to have an impact naturally, I think, to policy decision.
How's this all playing out for the Aussie dollar at the moment, Pete?
Yeah, well, it's running at 66.65, so it's had a really strong rally over the last couple of weeks, Andrew, and that US dollar's continued to be sold off. it's sitting the best part of around that, low 103. So it seems to be showtime for the Aussie. Let's see if it has the potential to take out a 67 handle. But if you're looking at the technicals, it seems to be having a fair bit of momentum to the upside. But again, that US dollar's come under big pressure to the downside. So, and that's been evident by gold and so on.
Elsewhere in currencies, what are you looking at? Of course, a focus remains on the yen, given speculation that the Bank of Japan may intervene.
Yeah, exactly. You're thinking it could have shrunk that Q3 down to 0.5% negative. So that's a concern naturally for the Japan situation and whether you're going to see a change in policy. The yen sitting there, it's really been an incredible push to the over the last couple of weeks down to 146. Who could believe it, under 147? So maybe it's got the potential to take out a 145 over the next week or so, or in the 145. So that seems to be, that general momentum. And again, softer US dollar, stronger yen, even the euro's been quite a nice trade as well, and certainly the pound.
So, Pete, let's refocus then on equities. How markets are set as we lead into Christmas. As you pointed out to me earlier, 3 weeks until Christmas, in fact.
Yeah, 3 weeks to today. I mean, you look at that S&P 500. It's analysts are saying, and many chartists, has it got the potential to take 5,000 out by New Year's Eve? That's a big push up from here at these current levels. But hey, who can say it won't happen? Because what you saw in November was extraordinary move to the upside, and obviously the first day or so of December hasn't disappointed either. So that was a nice strong move on Friday. So if the stars align, Andrew, it could do it. But I mean, who's to say it won't do it? We've just got to sit here and buckle up. It could be an interesting ride up.
Pete, in terms of commodities, of course, we've spoken about gold. What are you seeing in oil at the moment? Because we did get that extended supply cut from OPEC Plus late last week, although it underwhelmed the market. As a result, we did see the oil price come off again.
Yeah, exactly, Andrew. It was very underwhelming. And so it seems to be a mixed bag, but it's been sold down by traders and sold down heavily. Brent is sitting now at 78, 80. And you've got WTI just above 74. So, we could see that drop a couple more bucks. I would have, it's very hard to speculate what OPEC's going to do because everyone, I think, was of the mindset that it'd be a cohesive band, it'd be a strongly, the determination of OPEC to really, maintain all of these cuts. But it seems to be faltering at the moment. You've got the Angola situation, Nigeria and other players. Compliance is going to be the real focus over the next month or two, and then leading into 24, how all that's interpreted from market participation and, where does oil go?
Pete, let's round it out with what we're seeing in the crypto market at the moment and taking a look at Bitcoin as we speak, just below 40,000 US dollars.
Yeah, it's been incredible, hasn't it? I mean, it's just strongly bid, and you got 39,600. Is 40,000 going to happen this week, Andrew? It's just, very, very strong move to the upside, and that's, you look at gold, you look at Bitcoin. They're plenty of traders are jumping in, and they're seeing more upside. So you just got to wait and see how it all rolls. But don't get in the way of a rally like that. 130% move to the upside since January 1. So that's an extraordinary move, and could be a very interesting 24 for Bitcoin and all the other cryptos.
What was to say more generally about risk appetite at the moment, Pete?
Well, when you're thinking of that, I mean, your alternatives, Andrew, the appetite is they've all bid gold up. They've jumped onto crypto. Equities are up. Have a look. I mean, people seem to be dropping out of that US dollar. They seem to be fleeing from it a little bit. So possibly they're looking at the alternatives, and that seems to be very strongly, currencies, commodities, and, crypto.